83, 91, 99, 40.06. Support below at 56, 48, 39, 31, and 21. Pivot 64, support 56, 48, 39, 31, 21, resist 74, 83, 91, 99, and 40.06. Welcome to some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur once the market paints some bars. And we're looking to have about maybe 4 to 5 trades during the course of the morning. We focus more on the morning hours to give us our opportunities. We feel that works well. The dynamics in the morning and the ebbs and flows and the volatility in the morning suit our methodology. And so we focus on those opportunities that the market might or might not give us. Lately, it's been kind of a little bit slow in the morning. It's kind of slow all day, so we have to take what the market gives us and look for next opportunity when they present themselves. All right. Again, if anybody has any questions as to what we do or how we do things, please feel free to ask in the chat, and we'll go from there. All right, market's down ticking here just a touch. Let's see if we have any numbers coming out. I think unemployment is on Friday, so market's going to be kind of keeping a little eye on that, I think. Obviously, the possibility of interest rate situation is getting a little bit more bleakish as far as the yield curve is concerned. We're closer to 90 basis points now, more than anything else. It's creating the angst in the equity market as we've down drifted here a little bit over the last couple of days, kind of staying here on the lows, and then we'll see what the unemployment number will create on Friday or not. This morning, we do have a number here at 8:45. PMI Manufacturing Index is coming out here at in about 14 minutes. And then ISM Manufacturing Index coming out here at 9 o'clock at the top of the hour, as well as construction spending. So a couple of opportunities. So that's what it's coming out here, so we'll have to deal with that. Again, I'll repeat the levels here for us in case you might have just joined us or come in a little bit late. Our pivot this morning is 39.64. 39.64, support below at 56, 48, 39, 31, 21. Resistance on the upside at 74, 83, 91, 99, and 40.06. With a little range on there, by the market, kind of going nowhere fast. Patience is important, obviously. We have to wait for the market to give us those opportunities. We do have um, a number coming out here at 8:45 in about 12 minutes. All right, so we'll see what that does to us or not. And kind of range bound here. Again, they tried to rally it overnight. They did a good job, and then just kind of pushed it down here over the last hour or so. For the most part, it was holding up. Well, it was a little bit of gain, and they did have a Fed speak that did have a little bit of a talk that could have created a little push here to the downside over the last hour, and now we're just kind of hanging here on these lows. We do have a number coming out here at 8:45 in about 10 minutes, and then additionally, ISM manufacturing and infrastructure spending at 9 o'clock at the top of the hour. We'll see what that does for us. All right. So let's see what will happen. All right, let's see here. Let's see what we can talk about while we wait for these numbers. Let's see. Hedge funds and mutual funds are warming up to stocks after last year's sell-off, but exposure to equities is still historically low, according to Goldman. The latest analysis, the firm looked at 758 hedge funds with $2.3 trillion of gross equity positions, as well as 543 mutual funds with $2.4 trillion in assets under management. At the start of 2023, among the stocks they saw favor in were Humana, Wells Fargo, and among those out of favor or even shorted were Caterpillar, Walmart, and Disney. Oh, interesting. There are the levels for us in the chat if you didn't have them written down or anything, as we are definitely kind of range bound here a little bit. Tesla's come out with earnings after the bell. Pay attention. Tesla shares after the bell as the EV leader holds its investor day at 4 o'clock Eastern, right after 3 o'clock Chicago time. Third edition of Tesla's master plan, following part 1 in 2006, part 2 in 2016, will be a major part of the event, which was likely detailed the company's long-term expansion plans and new gigafactory in Mexico. All right. Another announcement could touch on the Project Jupiter, Jupiter, Juniper, Juniper, the Cybertruck auto autonomous driving energy storage initiative, charging network revenue potential, and the Tesla bot. A lot of stuff they're doing. Okay. We'll see what happens. That's Tesla. That's after the market closes at 3 o'clock. So if you're trading like at 3 and it comes out, be a little bit careful there because they could get some, the market does close at 3:15. So, all right. Do we have a number coming out here in about 5 minutes? Keep that in mind. We are trading mini S&Ps here, looking for opportunities to scalp. Again, we have our levels. If you look at the chat, you'll see the levels. Our first resistance on the upside is at the 74 area. We got our blue band coming in there at 70, right in here. So if you are going to trade the blue band, it's coming up to it. All right, number coming out here in about 4 minutes. We did get right up to bumped up against our blue band area there. Got right up to 69. You can see where our blue band is right there. If you were a little aggressive, again, there are different price action opportunities that are occurring as well. Been mentioned the fact that we're bumping up against our blue band there. We do have our first resistance area there at 74. You can see our green bands coming in there at 75. And just kind of range bound, unfortunately. But maybe these numbers will create some volatility for us. Again, all we can do is wait for the market to give us an opportunity to trade. That's all we could do. Again, if anybody has any questions, feel free to ask in the chat. We are scalping the market based on the levels that are in the chat there. And if you don't have them or if you can't see them, let me know and repeat them. We just have to kind of hang and wait. I'll give you the first couple levels on the upside. There we got 74 and 83 on the upside. 64 is our pivot. Downside support we have at 56 and then 48. And right now we're just kind of hanging right around our pivot here. Again, we'd love to trade, but we have to also wait for the market to give us those opportunities to jump in. We have to exhibit some kind of patience and wait for opportunities. That way we minimize our risk exposure and also minimize the number of commissions we give our brokerage house. Last thing I like to do is give them commissions. All right. Unfortunately, we're just going to hang in here. All right, we're just going to hang in here where this number is going to come out here momentarily. See if it has any effect on the market. As you can look at the chat bot. I mean, you look at the ladder ticket there, they really thinned it out. There's no 100 lots up and down the ladder ticket. As the number here is released, a little pop up to the upside. We don't like to have positions on when numbers are released, so we're just kind of flat looking to see. We've got 74 up on top as our first level of resistance. So came up here to 69 again, but I would not touch the 69 this time around. I'll look for the 74 area. Yeah, we did get right up to that 69 there, couldn't pierce through it, and came back down here a little bit. Okay, we're coming back up here. See, we're looking at the 74 as a first level of resistance. Again, if anybody has any questions, feel free to ask in the chat. I'll repeat the levels again. Our pivot this morning is 39.64. 39.64. Resistance up here at 74. 83. 91. 99 and 40.06. Support below at 56, 48, 39, 31, and 21. Now we're trying to inch up here a little bit. We did have a number that came out here at 8:45, creating this some little volatility here. We're still looking at the 74, some resistance. All right, trying to come up here to the 74. That's our first level. It's an area, so we kind of get in around it. How where we get in and around it and how we get in around it are definitely it's up to each individual. We're coming up here to 73. Maybe some of you coming in there. Maybe you got in there earlier. It depends on what your risk tolerances are. 5.5 there is also the settlement price in addition to their green band. So we've got couple areas of resistance up here. Okay, we're coming up here to the 74 and continuing to push up here. Like I said, the settlement price here is also at 5.5 in addition to our green band. So again, keep your stops in place because we're not going to love any trade we put on. And whatever the number is creating this little push here to the upside. And obviously getting a little bit happy the market. All right. Trying. And we'll come back here to the 74. If you don't like the volatility, or given a chance here to get out of some, especially if you got in there at the 5.5 area. I mean, let's lighten the load here a little bit. Just now working a little bit better. Again, just make sure you take some profits off, and especially since we don't like the price action. But it looks like it might hold at 5.5 area. If you traded that, you did okay. If you scaled in up there, you should have been able to scale in up there. I was kind of hinting it the whole time. When I put out my levels, I don't look and see where the settlement price is. Obviously, the settlement price is part of the fact here that you have to consider of scaling in, especially if it's a backdrop. It's another reason to trade. Again, giving us a little bit of a rotation here. Again, take some profits here. And we're trying to push down a little bit. Again, if you're trading multiple contracts, that is. All right, nice rotation there against our 74s. I mean, even up to 75. You should have been able to go up there because of the settlement price plus our green band up there. Sometimes we have to adapt to the price action. And you can see in the chat box, the levels are up there now for us. Thanks there, Don. All right, so nice rotation there. Got down to 71 and change. And now coming back up here again, we were patient, waited. We talked about the different areas of resistance up there, and they did come through, kind of held. And again, we're looking for multiple reasons to get into an area, and we had a nice rotation against it. And now next level on the upside we're looking at is up at the 83 area. A little support there at the 69 if you're a little aggressive, but I keep a tight stop on that if you're going to take it. All right, coming back up here. Next level of resistance we have is up at the 83. We do have a couple numbers coming out here at the top of the hour in about 5 minutes. We have ISM manufacturing index and construction spending, and both of them could be market movers. Those will be released here at the top of the hour in about 4 minutes or so. And again, we don't like to have positions on when numbers are released, so kind of flat if that down that occurs. You can see this last number here that came out at 8:45. The PMI manufacturing index created this push up here to the upside. We were kind of narrow. We were kind of very range bound there for the longest amount of time, and then all of a sudden they extended, gave us this little opportunity against our first resistance area to scalp. Again, we're looking for scalping opportunities. About 3 points. Looking at range 2 to 3 points, 3.5, 4 point stop, and obviously we got a little bit more than 3 or 4 points on this little move here off of this first area. Again, depending on how you scaled in, right? Everybody trades a little bit differently, so I keep that in mind. And we talked about the 55.5 being additional resistance area when it first got up there. So I'll give you a chance to maybe expand your entry point there a little bit, or maybe extend it a little bit. Again, you got to look at the price action I mean, the levels are out there, but the levels also get tweaked and adjusted. So All right, they drifted quickly back here. Again, a little support here at 69 if you're a little aggressive, but keep a tighter stop on that one. Again, if anybody has any questions, feel free to ask in the chat. And if you look at the chat, you'll see the levels that we just gave out early this morning. We do have a number coming out here momentarily. You can look at the ladder ticket. They lighten the load up. There's not even 20 lots in the ladder ticket right now. And there you have a little pop to the upside. Bonds, bonds were hiccuped. This is why we don't trade. That's why we don't trade numbers. Don't have positions on when numbers are out. I mean, you could trade the levels. Oh, wow, look at the bonds completely hiccup there. One way, then reversed. And they don't know what to make of it. It was probably better than expected, usually the case. We are trading mini S&Ps, equity futures. Coming back here to, I got the right down to 61 and changing and popped the right very, very, numbers, people trying to decipher what they mean. And you get this little algorithms kicking in. It's impossible for you as an individual trader to try to out trade the algorithms. So, I mean, the only thing I would have done, I mean, I had my orders in place. If they got triggered on the rotation to the upside or downside support, I would have been okay. Otherwise, I would have traded that. And you have to keep that tight. But and sometimes it doesn't even matter when the market is illiquid like that. Your stops don't even mean anything. All right, chopping around here, even though it was very whippy, didn't really get out of that range. They didn't make a new high, they didn't make a new low. So, but the chop around in that range, and bonds kind of did the same thing. They made a new low though. All right, it was still on that range. Again, we're not going to trade when numbers are released, so I mean you can see why. But again, I did have my levels. I don't have my normal amount of contracts that I would put on at those levels. I kind of tone it down a little bit. So you have to learn to adjust. You have to learn to adjust to the price action. You have to learn to adjust to market volatility and when it's coming out. And you have to know, obviously, that's why we try to let you know when numbers are released. But even if you didn't know a number, or if I didn't know a number was released and somebody didn't tell you, you could look by the ladder ticket how they really got rid of all the bids and the offers. There were only 10s and 20s in there, even less than that. So you kind of knew something was up even before the number was released. So that's another good indication if you are trading to exit some of your trades, just because it's not a good thing you get really lucky to have the right position on. I mean, I'll be honest, some guys do love trading that, love having a position on when numbers are released, and some traders do, and they like the action. I just don't. But There's different people, different traders. Not everybody does the same thing. So I keep that in mind. Everybody does their own. And there's really nothing wrong about that. Okay, we're bonds here kind of staying on the lows. I think bond market, like I said, the bond market is definitely having a little bit of a uh, effect in the equities as ever since uh, uh, they Jeremy Powell had his last discussion about interest rates and how they've been very hawkish. It's put a lid on any kind of rally here in the equity market, and we're definitely under a little bit of pressure. All right, now we're drifting down here. We got support at the 56 area. Again, the market is definitely forcing the reaction in the bond market here. You can see they're really pushing the bonds down. Got right down here to 56, trying to get a little bit of a rotation here. The volatility is a little bit too great for you because all of a sudden they picked up the volatility and then just kind of traded smaller or don't trade it at all. We're getting a nice little push here off of the 56. All right, coming down here, testing that 56. And I got up to 58 and came back here a little bit. Again, we always talk about, if you're multiple contracts, you have to exit some, especially in the bond market, like giving it all up here, putting pressure on market. And the bond relationship with the equities happens sometimes, and then the relationship kind of dissipates. So it's not always the same. But right now, obviously, we're getting a little help here from the bond market to get us down to the 56, and we're getting a nice rotation here off of our 56. This time you took very little amount of heat. The low was 55 and a half here, and you're getting a nice 3 points off of the trade very nicely here. So nice little rotation there against the 56 area. And if you're trying to stay long, have a trailing stop. But the bond market, which is our chart all the way on the left, is bond prices go down. That means interest rates go up. And obviously, here tomorrow, the bond market is definitely creating this little push here to the downside in the equities because we were just following them, at least for a time being. It doesn't always stay the same, but for initially here with this number, so we'll see what happens. Our next support level. So a nice little rotation there against our 56 area. Next rotation we're looking at on the downside. The next support level, I should say, is down at the 48. It's always good to get a number out to give us some opportunities, right? Again, if you're trying to stay long, that's fine. I think you would put a stop there at 55. All right, so we did have a nice rotation there against our 56. Next support level we have is down at 48. If you're trying to stay long against the 56, anything below 55, have a nice tight stop. And again, just on whatever smaller contract amounts you have left. That way you're not gonna lose any money on the trade, and then look for the next support level down at 48. Okay, continue to down tick here a little bit. Looking at the 48 as our next support level. And if anybody has any questions, feel free to ask in the chat. If you were trying to stay long, we said below 55 out of any longs, and it's continued to down tick here. All right, again, a little bit weak here, staying weak, bond staying weak. Bond markets keeping equities kind of on the weakest side here. We got support down at 48. That's our next level of support that we have. Again, make sure you keep your stops in place no matter what. We've gotten some nice rotation there against our first resistance area there at 74, and then our first support here at 56. And now we continue to down tick. The next support area that we're looking at is at the 48. All right, again, staying weak. Look on the lows, bonds on the lows. Again, bond market, I think, helping equities stay weak. And that relationship is not always going to stay the same. Remember, we talked about it, that they seem to, after a number comes out, they seem to kind of go together in tandem, but then they kind of stop doing that after a little bit. So don't just look at it and say this is what's going to happen the rest of the day. I'm just saying that for the time being, anyway, this is what's going on. We're looking at the 48 next, kind of staying away from this little choppiness here. Got down to 50 1/4. There's a 500 lot there at 50. I think that they're eyeing out. They're just checking it out, kind of holding the market up here a little bit, but looks like they're going to take it out too. And then it looks like they got another 400 lot at 49. Somebody's trading some decent size at the bigger levels. You can look at the ladder ticket there. You can see 500 at 50, and then another 400 and some at. Oh, they got the 49 got lowered. Just hanging here on the lows at 50. You can see how there's obviously somebody had a big order in there because they took the 500 out and they still added another. It's like somebody's got a big order there to get filled there at the 50, kind of holding the market up there. They took the 500 out and some more orders came in behind it, even though they don't show it, but like 1300 traded down there. So obviously there was some interest in that level, and there's always those big levels like those 50s and 25s and evens. There's always some big numbers around there. All right, so that 50, that those little orders in there, that the 50 area did come into the market even after they took out the 500, and then obviously somebody was trying to push it down. They came in with more orders behind it and kind of caught everybody a little bit short, and thus you have this little rally here, and you also have a little rally there in the bond market as well. And kind of not helping that guy who sold the 500 lot. But no, it is what it is. That's what trading is about. Again, if anybody has any questions, feel free to ask in the chat. We had 48 there as some support. Obviously, you're going to have to be a little bit careful there around the 48 now because we did get down to 50 and double bottom there. So it's a little bit more tenuous than it was, 5 minutes ago, the level. So the way you handle that is by adjusting your risk and maybe trade a little less around that area. Your entry points further apart. Just make sure you adjust a little bit to take into consideration the fact that we got down to 15 pop back up. You got to look at the price action, right? Remember, same thing up on top where we said, um, the 5.5 was the settlement price, and even though we had 74, we talked about 75.5 being the settlement price. So, had to make sure you took that into consideration. So you always got to look at the price action uh, to help with your opportunity, and sometimes you have to adjust accordingly. All right. Well, they seem to have held at 50, so be careful there at 48. And again, if you look at the bond chart and look at our chart, they kind of look the same after the number, right? Rally, break, continuation break, hold, double bottom, rotate. For the time being, they seem to be trading exactly the same. But like I said earlier, that's going to probably change. But um, fortunately, they did not get down to the 48. That would have been nice, but that's okay. All right, nice little rotation up here. Got a little resistance around our pivot area there at 64. If you're a little aggressive. It's amazing right now how we are trading just like the bond market. Pretty amazing. But again, that might not always be the case, but for the time being, it is. A little resistance around the 64. Keep your stops in place. We get above 66 out of any shorts on downside support there. We're still looking at 48. It's a little bit more tenuous right now than it was. Unfortunately, I got down to the 50 area there and then rotated back up. So it's not as strong as it was, 10 minutes ago. Yeah, if anybody has any questions, feel free to ask in the chat. We'll be kind of walking through some of our trades that we have been getting involved in, kind of finding areas. The objective of our education course here, by the way, if you're interested, is understanding why these areas, finding these areas, and making you understand why we would pick them, and how to adjust them sometimes, and also when not to trade, when to trade. We do all this so that the goal of our education course there is to make sure that you are able to find these areas on your own and to trade them accordingly, according to your risk tolerances versus anybody else's. Do we the strategies work for cryptocurrencies? I am not. I can't tell you whether they do or don't. I just will tell you that the strategies that we teach are technically based. So you could probably take some of the same concepts and ideas because they're technically based and use them in other markets as well. We stick with S&Ps only because they do trade technically with what we do very nicely. But that doesn't mean that I don't look at cryptos. I don't understand them, so I don't trade them. I try to stick to markets that I have somewhat of a good idea what affects it, and I know sometimes when to trade it, when not to trade it. And cryptocurrency, I just have no idea. So I there's plenty of opportunity here to trade the ebbs and flows. Like I said, I'm not. You could probably take, because it's technically based, you can take some of the same ideas and kind of transform them to other markets as well, for sure. I know we do it in the bond market. We did it in the bond market, but the bond market also, we used to trade the bond market all the time. I mean, I came from the bond pit. I traded in the bond pit for the longest amount of time, but um, they started not trading well technically because of the fact that with all the quantitative easing that was taking place back in 2008 and 10 created a market that was not trading technically well. Kind of starts doing his own things. But there are certain things that you could take even in the bond market and transform them using our methodology or strategies, and use them to help you make money there too. But it's a little bit more. I'm just sticking to the S&Ps because of the volatility, and the opportunity there is just as to me is better than trading the bond market. As far as the cryptos, like I said, I don't understand them, so I never got into them. But like I said, the strategies are technically based, so should be able to work. All right. Again, we are kind of hanging here on the lows. Looking again, we have to be a little bit careful there. Like I said, around the 48, that's our next support level because of how it kind of stopped there at 50. So I said it's a little bit more tenuous. So trade it a little bit less aggressively than you usually would if you are trading multiple contracts. You can adjust a little bit. Don't trade as many. Enter a little bit differently, and that way you can manage the risk of the level, given the fact that we kind of just missed it by a little bit. And if you're more risk averse, don't even trade the level at all, and just look for the 39 on the downside next. All right, bonds here kind of drifting back down to the lows, and we are kind of just drifting a little bit towards the lows. But again, at some point, like I said, they're going to disconnect. The ISM manufacturing number came out was 47.7. They were expecting 48. That was not the big surprise. The part that was so that was the initial rally that you got, especially in the bond market. They see they popped it up first, but then the prices paid, which is the inflation component of the ISM manufacturing. They were expecting 46.5, came out at 51.3. Hot, very hot, and thusly inflation, hot inflation. That's where you see the bond market hiccup. That's why they popped it, rallied first, and then because the initial number was, oh, okay, that's not so bad. But then they looked at the prices paid number, and then that's when they sold it off. So that's why the market did what it did when the number was released. All right. It's kind of hanging here on these lows. If you look at the chat box, for those of you who might have missed them, those are the levels again. Again, if anybody has any questions, feel free to ask in the chat. We do focus more on the morning hours to give us our opportunities. We feel that the dynamics with the volatility, with the number of traders that are trading at the time, I think as the day goes on, there are less traders in the participating in the trade, becomes a little bit and the dynamics change a little bit. So we kind of focus more on the morning hours. We feel that the dynamics fit our trading methodology better. And so we average about 4 to 5 trades a day, depending on how aggressive you want it to be as far as an individual trader, how much risk you want to take, how you manage some of those trades. But on average, you do look at about 4 to 5 trades on average a day. All right, now we're just kind of again they always get into these like ranges and kind of get themselves in a little bit of a back and forth, going nowhere, and then they decide to extend. So bonds did make a new low, but we did not. So again, this is where it kind of disconnects here a little bit. Like I said. All right, it's kind of we're just kind of hanging on the lows again. Bond market kind of keeping us under constraints, not letting us rally, and we talked about why already. All right, the market kind of pushing up here in these interim little highs here. And again, as the bonds are kind of on their low. So again, this is the disconnect that we talked about. So if you were following bonds and this and that, they kind of do kind of stop following each other after a while. On the initial rotation, because of the number, that created that push and they were following it, but then they kind of just now are just kind of doing their own thing. So we'll see what that like I said, upside resistance would be around the 64-hour pivot if you're looking for a little uh, price action opportunity. I mean, keep your stop in place. If we get above 66, I think you definitely don't want to be short anymore. If you're looking for a scalping opportunity, again, these are price action opportunities. They're not as strong, if that's the right word, as some of the other opportunities that we have at some of our levels, but nonetheless, they are price action opportunities for those of you who are a little bit more aggressive. All right, coming up here to our 64 area. If you're a little bit aggressive here, I do not trade cryptos. Do not. What are my thoughts on cryptos? I wish I had could give you a good answer. I don't have a good feel for it, so I don't understand it, and so consequently, I'm not. I don't like to trade it for that reason. Wish I could tell you there was another reason, but I just don't understand. Do I have some in my portfolio? Yes, but I'm not trading it just because I should have some in my portfolio. But like I said, I'm not into trading the whatever that is. Right. So as far as trading mechanism is concerned, I'm not. I don't have the charts up. I don't look at them. I don't know what they're up to or they're doing or how well they trade technically or not. I just not. It's not really part of what I do. So I'm not. I can't give you an honest answer as regards to what my thoughts on it are. Like I said, I don't understand the concept, but it's out there and people are trading it. So again, I think you could probably take some of the methodology that we have and transform it into uh, some of the same ideas and trade that market as well. Like because what we teach is more of a technically based um, concepts, and so consequently, you should be able to use some of the same ideas and based on technicals, and then kind of use it for that market to trade. But do they trade well technically? Do they find those levels of support and resistance as well as they do here in the equities? That I can't tell you. The only way you could, if you are interested in learn what we do and then try to see if that works over there, or just stick with S&Ps. It seemed to be working fine with S&Ps. Just on the technical analysis that we do, there's reasons why areas become important. We explained that in our course that we offer, and we look at it and try to say, well, why would a market stop here or continue to rally or not? And it repeats itself more often than not, and consequently, then those are the kind of uh, things that you're looking for when you are, uh, finding areas that you feel might work. So uh, the market seems to repeat itself in certain areas, certain zones, like you put it, and consequently, those are the things that we're looking for to give us levels that we feel market will give us a little bounce off of. If Let me see, if you go to the drop down window and put it down to host and panelist when you type in your question or your comment. You put it down to host and panelist, and if you give us your contact info, somebody will reach out to you. Just give us a telephone number, and then somebody will reach out to you. But go to the drop down window and go to host and panelist, and then just type in your um, telephone number, and somebody will give you a call and see if you're interested and if we can work out something. Glad to help you. All right. Again, we said thought 64 might help, but that obviously did not. They kind of rushed it through. They got everybody short there and pushed it through, and now there's a total disconnect between bonds and S&Ps. As bond lows and S&Ps here are pushing up here to their highs, but we also told you to keep a tight stop there. That we said we get above the 66, we might push higher, and we are kind of doing that right now. So there was a reason to keep a tight stop there, and there's also a reason to not be short above the 66. And now we're just kind of hanging up here. We get above 77. They might push us up to our 77, 78. They might push us up to the 83 area. That's our next level on the upside that we have. So we got to get above 77. And then we might get up to our next level there on the upside there at 83. Getting a little choppy here. That's why we talked about only being aggressive there if you were going to take that trade. All right, seem to be pushing up here a little bit. We got to get above the 77 for a push out to the 83 area. Bonds here staying on the lows, but again, there's definitely a disconnect now. So it is what it is. All right, we're just kind of hanging here on these interim highs. So we're looking at the uh, above 77, a push higher. All right. Seems definitely things have slowed down here quite a bit. So we'll see what happens next. It's gonna hold at well, that 64, our pivot seems to be a key area here. They get below that, they get below the 60, could push a little bit lower. Bonds here continue to stay weak on the heels of some of the numbers that were released. Again, concerns about interest rates, concerns about 50 basis point hike uh, coming back into play here, and the market is just nervous about it. I think rally was created because of the thought that there was going to be some kind of conclusion to interest rate hikes and the numbers were getting a little bit better. But when Powell spoke last time, he kind of put a kibosh on all of that and definitely created this little push here to the downside over the last 2 weeks in the equity market and also in the bond market. Bond markets were doing pretty well there for a bit. But as you can see, the rates started going up, and we started also downticking there in the S&Ps. I don't think they're going to raise 50 basis points. I think they're going to do 25, but they're going to do an extra 25 instead of like two more. They might do three more. I mean, they have to let all these rate hikes kind of take effect, and in the housing industry, they definitely have taken effect. Numbers in the housing industry have definitely prices have come down, and number of people requiring mortgages has come down. So it definitely has affected that area, except um, the supply issues keeping prices higher. Like there's always some kind of issue with the supply. Like eggs have been going like crazy, like so much. Except they finally started coming down a little bit. That's one little area that you would never think should be a problem. And it's like so the supply side, and they're saying it's they can't supply enough or there's supply issues. So that's creating prices to stay higher. They're almost like pushing. They don't want to have a recession. Looks like, seems like. It just seems like to me that's what they're trying to do. And I think the bond market last time, when they got up to the 4,200 area here, just most of the month of February, they just kind of thought that they were going to stop with the rate hikes and maybe do one more. And now, seems like after they came out and he started talking and he said things are not still, they're still bad, and we're still going to keep raising. And he went completely hawkish, just off the rails hawkish, which I thought, which he always likes to, kind of make things a little bit nicer than they seem. But he didn't. Last time he had his conversation, that they were asking him questions in his after the FOMC decision, he went completely hawkish. So the market didn't like that, and in the last 2 weeks have been continuing to, slowly downtick, and the rates uh, continue to uptick. And like I said, the yield curve continues to steepen. So All right. Again, coming down here to our pivot area there, set a little bit of support. Again, if you're a little aggressive, maybe if you're looking for a little buying opportunity here, but whatever the case is, keep your stop in place. So there's a little support here based on the work that we do. If it doesn't work, that's fine. Just make sure you keep your stop in place. Again, you have to be a little aggressive here to be able to trade these little price action opportunities. Trying to bounce off here a little bit. Got down to 4.5 there. There's a nice little pop here. Again, we talked about some support there around the 64.5 area. Right, came right up to it, and nice rotation here. If you wanted to get long, that was the spot. So again, this is a price action play, and you got very nice rotation here. You got 4, 5 points out of this trade here, very easily with very minimal heat. So nice trade there if you did jump in. Again, we average 4 to 5 trades a day. I think we've definitely, even though it's been a very slow day, we've gotten at least 4 trades, 5 trades, probably a little bit more depending on how aggressive you want it to be. And I don't talk about all our price action opportunities. I don't talk, it's not a right for the people who've taken our course to talk about them all, but there have been a couple other opportunities there, but we did say that we have support here at the 64 area. Got down, like I said, to 64.5 and then popped right back up. So if you did jump in there against that area, you got a nice little quick opportunity there. Got right up to 70, and then now it's coming back off here a little. So again, it's just a matter of finding those opportunities, and it all depends on how aggressive one individual is, whether you're going to take that trade or not. All right, now we come back down again. The trade was there, when we had that first rotation to it, and obviously when it comes back to it, it's a little bit different. It's not the same as the first opportunity you had to it, so it's a lot riskier this time around. All right, now we kind of just hanging here on the around the pivot area. and very, very neutral right now. Don't have anything here. We could easily get below 60 and rotate back down to the lows. Um, so uh, kind of be a little bit careful here, and this is where it becomes a little bit tenuous as far as trading this here, because kind of it could go either way here. So don't have any good feel right now. I did like that first rotation to 64.5 area 5 minutes ago, but right now it could easily rotate below 60 and go back down to the lows. But got no feel. Again, if you're going to trade the 48, you got to be a little bit careful there. It's a lot tenuous because of the price action and how it stopped earlier. Again, if you're going to take it at all, depending on how risk averse you are, that obviously is going to be a concern. So be mindful of that. All right. Again, if anybody has any questions, feel free to ask in the chat. We do focus on the morning hours, and we're coming here towards the end of our morning session. The trade here could get a little bit choppy. I mean, if we start trading in the range, it can go back and forth. Again, unless it's going to extend, and we have the levels that we have on this extension to the downside and or up to the top. Bond market is still influencing, I think. As you can see here, they're on their lows, and maybe at some point we're not on our lows, but it's keeping us weakish. All right, no problem. We're here every day, so if you are going to be trading tomorrow, we're here. Obviously, Friday is going to be unemployment, so that could give us some craziness in the morning. You never know. Unemployment can go either way. They could be really kind of everybody kind of waits for unemployment, and then all of a sudden it comes out, and then nothing happens. So who knows? But we'll see what happens this time around. But that's on Friday. It's always a big number. But we've had the number today kind of moved us a little bit too, so it was not so bad. All right. All right. Again, be a little bit careful here. Like I said, I have no really good feel for it right now. Use the levels, especially be careful there at 48 upside. If we get above 77, we'll look for our 83. And kind of in the middle here, could really do anything. Get back in a bit.